Thank you so much. Welcome, everyone. It's good to see you guys. I'm so excited about this. I have been wanting to have this for a very long time. As I was preparing the presentation, I was feeling maybe I need to have another one, which is paying, which is outflow of cash. But for now, we're going to focus on the inflow, the money coming into your bank account. Thank you so much for coming on time. Welcome. And please note, we will be sharing the link, but this is also live, which means you can actually go to it at a later stage to actually go through. And please remember to put in your questions on when you're not sure what I'm explaining or whether you need additional more explanation. And let's take this going. Bunol, is any admin that you want us to cover today? Denise from my team, is any admin? I know some of you are not necessarily joining using a Zoom meeting. That's okay, which means then the link you have used will be the link where you will also get the presentation. So I am gonna just open, but maybe let me start by what are you hoping to hear today? Please engage with me, either leave it on your chat box or also if you are on YouTube, leave us the comments so that I can actually answer the questions. I see there's quite a bit of clients, old clients, some of them from the NEF. Hello.
Hello, and we thank you for this course.
Yeah, well, is that Amanda from Sasol?
No, it's Petunia Nguna from NPF.
Yes. Oh yeah. My goodness. Thank you for coming. Guys, just let me know when you can see the presentation. Petunia, just stay in, my dear. I'm gonna use you as my dummy, as my guinea pig, just to make sure I can be able to see the presentation.
Okay.
Just stay in, let me know when you're seeing the presentation.
Yes, we can see it.
Perfect, thank you so much. So guys, please grab your notes and a pen. Try to make as much notes as possible so that it allows you to be able to keep track. Some points I will move pretty quick, some I will move a little bit slower because based on my understanding of what you actually I will understand about your challenges in your business, but where you are not sure, just raise your hand or make a comment on the chat. And welcome everybody. Thank you so much for making the time to learn. In a meanwhile, just type your questions on the chat box. I'll be watching it and Denise will read those for us every 15 minutes. So that we are able to actually capture all the people that where they are behind on how to implement that. But I will also require you to choose out of these 20 odd strategies, which ones are you going to actually implement. I also added a bonus, about 6 more. So that is just for those who are going to stay till the end. And now sometimes also there's a network issues and all that, but we're gonna soldier on. If you happen to lose our contact, a connection, please do not stress, especially if you did register. Just go to our YouTube account, you will find the content. I will also make sure that once we have finished with this presentation, I have loaded the presentation so that you can also have this. And again, entrepreneurs, it's good that we are investing on your learning more when it comes to finance, but specific things relating to cash flow. Actually, cash flow is #1 reason why businesses fail. all over the world, irrespective of where you are. So focusing on cash flow is actually very important because it allows you to be able to actually have to continue and be a going concern. So what we're going to cover, a little bit background on me for those who are new and those who actually have not worked with me, even though I can see majority of you we have worked together. And we will then talk about my story in terms of the business, but also we will then talk about the today's topic, which is the cash flow and where you get the money. And then we'll focus on those 20 ways. And then we'll have a bonus. And I will then also ask you to do some action, because there's no point of learning if you're not going to practice and do the work that is expected for you to be able to see the results. So you're not going to see the results of cash flow by attending the session, but by implementing the ideas that we're talking about here. So my name is Precious. Those who do not know, I'm a chartered accountant and a registered auditor by profession. I have been doing this for over 20 years. And I actually sit on more than 10 boards. Recently got appointed in the People's Fund as a non-executive director. We're looking forward in working with entrepreneurs there. And we have trained over 3,500 entrepreneurs in finance and just in business. You can check out my website and in more detail my story on preciousmvulane.com. I think what I would like to share mostly with entrepreneurs is that sometimes we go to the market, we have an idea on how the business is going to work and turn up. And what we do then, when we go with that type of mindset, we're already set up on thinking, you know what, this is what I'm going to do in the market. But if we're not listening long enough to the market, and responding to the market, we can actually get stuck. So when I started my business, I started as an auditor, and but I have ended up being a trainer and a content developer and a teacher. And that is because I picked up that the market was not looking for an auditor. At best, they needed a bookkeeper and accountant. And therefore, no matter how my qualifications or whatever requirements I was looking for when it comes to auditing, they were just not prepared. So the target market I was looking at was not prepared for an auditor. I then had to change my business model, change the way I was doing things. I ended up publishing the book, The Essential Finance Handbook. Denise will just include the link on here for those who would like to actually buy the book. We are now on 3rd edition. What did I learn when it comes to the two topics of today is that in my business, my accounting and auditing firm ended up with 2 million of customers that were not paying, which means it's definitely not nice. It's not worth it to be nice and sacrifice yourself or your needs in the business. So for you to really take ownership of what we're going to cover today, you're really going to think of what are my primary needs? What are my needs of my business? Take your business as a priority. Sometimes we confuse being nice. I think in my case, I just didn't feel, I felt the clients couldn't afford me anyway, but I also felt sometimes the clients actually were struggling themselves. So I will say, I will listen to the story and say, okay, pay me next month, or pay me by this time. But the client never comes back anyway. So I then sacrifice my business and my own needs. And that is why then I end up realizing, you know what, it's not sustainable. This is what I need to do. This is how I need to do it. So most of the things that I'm going to be sharing with you, actually all of them, they are not a theory. They are purely the things that I have learned that work in this space, small businesses and startup, and also are the things that I think are practical that we can implement. So you see, I also wanted just to cover that our today's topics, when it comes to cash inflow, we really need to understand that income will come in 5 areas. Cash inflow will come in 5 areas. Money from customers, money from investors. Money from investors can be both equity or debt. Money from bankers will generally be a debt. And then money from you as a founder can be both debt and equity. And asset owned by the business, those assets generating a cash inflow could also be coming from a business or could be even be coming from the partners. So when the assets are owned by business or partners, that also you can have some cash inflow on that. But for today, I'm only covering number 1, money from customers, focusing on how to strategize and work through and what are the things to do in those areas. I guess one day, if you guys want additional information or more presentation, I can do the other 4 items at a later stage. But I felt this is the one that I found entrepreneurs really coming short in. So we are focusing, as I said, on money from customers, sweating the asset. I love that because I honestly believe that we build these businesses and we never let the asset really sweat the money. We never let the asset to generate money for us. So what are the things that we can do to make sure that there is an inflow of cash in our businesses? Number 1, on these tactics and strategies is we have to set terms and conditions. So how you will set up the terms and conditions for your business as a small business can be an expensive exercise. Why? Because you might need to get the lawyers. But I've got few ideas for you here to assist you to reduce the cost, but still achieve the objective. So first, how you're going to do this, you're going to take your terms and conditions, benchmark them with your leaders. Where are you going to find your leaders? You're going to find your leaders at GSE, the top 5 in your industry from your journal magazine. Number 2, within your terms and conditions, identify clauses that are non-negotiable and the clauses that are negotiable. Number 3, vet your terms and conditions with a debt collector or a credit insurer. So a debt collector, you don't need to pay them, can actually be someone that you have contracted with, whom you will say to them, I will pay you when you actually have earned or got the return. So you give them your book of debtors that they need to collect, and then you will tell them that they actually will be paid based on the money that they will actually collect. Credit insurer, you will need to share the terms and conditions with them so that they can take it to their lawyers, so that when you're now looking for a credit insurance, you don't need to redo this exercise. Plus 2, they will actually be able to tell you where are your risks in terms of your terms and conditions. Once you have done that and you are happy with your terms and conditions, you can then also then publish them and make sure when you are doing your invoice or doing the statements or doing follow-up emails with customers, you always refer to the clauses on your terms and conditions. Now, I would like also to just highlight that you building up on your terms and conditions, you can have terms and conditions for each of your products or for each of your service. There are terms that are generic in a business, but there can be terms that are specific to the product. So just be careful that you might end up with more than one when you have quite a lot of products and services. So like in my case, I do consulting work, I also do coaching, I also do training. All of these have separate terms and conditions. So number two, that of what you need to actually work on is to set up the financial systems. The setting up of financial system is really about making sure that you are automating your documentation, and the documentation is in one place. So a person placing an order automatically gets to trigger a stock within your accounting system, automatically gets to trigger the delivery, from the delivery gets to the invoicing, from your invoicing gets to actually accepting of payments, from the payments up to the time when the client gets the statement, from the statement, the follow-up emails. Guys, there are lots of systems out there. One day I will cover accounting systems that are actually cheap, that you can use, that can help you to automate these things. The aim is to make sure that your processes and systems are hands-off, lesser mistakes, but is fully automated. Building this might take time, but just do it bit by bit and make sure that you put this in place. When you have done this, you will not have problems with errors. You will not have problems with client not getting the statements on time. You will actually solve a lot of problems. Some of you have asked me several times, Precious, when you're talking about financial system, are you saying the accountant, what they are doing is not what I should have in place? No, that is not what I'm saying. The accountant's role is to summarize the accounting information. The systems I'm talking about here are the entry-level documents. So that is that's the difference. So if you need additional support on that, I will also include a link on this on YouTube where I'm explaining the role of accounting and how accounting works so that you can then relate to this. This is pure business, how the operations should run, how a bookkeeping should run. That is why I generally say to entrepreneurs, don't outsource bookkeeping, outsource accounting, because those things are different. I will stop there. I don't know if I'm already on time. Yes, we've passed the 15 minutes time. I will then take the comments and questions. If I may have your questions, guys. I see on the chat, Denise, is there a comment on the chat?
Okay, so we have Pumlani that's asked the question. He says, hi, Sis Precious, how do you separate business money and personal using the inflow as your day-to-day use? As a startup, there is no salary.
Pumlani, I have a feeling you have your hands in the wrong cookie jar there. So how you separate is you understanding that if you have a registered business, that business is a legal entity on its own, which means you should have your own bank account. Your business should also have its own bank account, and you should not be transiting or having cash withdrawal on your business, not unless that is for petty cash. And if it then goes to petty cash, it must be accounted properly as per the petty cash. Now, the discipline about separating your personal money and the business, it really depends on you. What do you want to make out of this business? Just remember, if you're taking money from the business for personal use, that is literally stealing, even though you might be a shareholder and a direct, because that money does not belong to you. It belongs to the business. But I also think entrepreneurs that mix business money and their personal money, they actually do not understand that they will not see the money. They will never see the result of their work, because they are taking the fruits and eating the fruits while they should be focusing on growing and planting more of those seeds of the fruit. So I think, Pumlani, start first by working out what is your personal budget, and therefore how much the business should be paying you as a salary. And then from that, work out if the business is able to afford that salary. Figure out, maybe there are instances where the business can pay you ad hoc work, and sometimes the business can pay you a base salary, and sometimes the business can pay you based on you delivering a specific project. So you can use those as a consideration on how you can pay yourself. You don't need to have one stream of income within your business. You can have different streams of income based on your business model. Maybe Pumlane, also consider asking yourself why you actually mix the business and your personal life, why you are not separating it. Just understand that if you continue doing that, your business will not have a veil. You will never see your work. Pumlan, I hope that you have been answered and you are clear on what to do. Okay, he's not responding, so I will take as though he can hear me, he's fine. The next question, there's Mangwa, his hand is up. Mangwa, come, please ask the question.
Good afternoon, colleagues, how are you?
We're good, thank you.
Good, good. Yeah, my question is almost similar to Mlani's name. But first, doing this. Okay, I've been running the business, I think, for 2 years now, but then I was only starting to try and make money this year, though it is difficult. But the problem is the recording of the money or the finances in the business. So that is a big problem, because at times I'd find a client that paid before I deliver the product, and then at the very same time I have to take the very same money and go and buy the product and deliver to the customer, and then from there I will have also to say use the money for other things, like maybe buying airtime,
Tell
petrol.
me something. Tell me something. Do you use a diary or a journal?
Not really.
Okay. When you are paying, do you pay with cash or do you pay with cards?
Sometimes I make transfers. Sometimes at some time they need cash, so I pay by cash.
Okay.
They don't. Yeah.
How many years you have been running a business?
Actually, I've started running the business, I think it was in 2019.
Okay.
Are
you taking your business serious?
Yes.
Are you taking your business serious?
Yes, I'm taking the business serious. So hence it's confusing to record and managing the finances.
Okay. So what you lack is accountability.
Accountability.
Yeah. There is no one who's holding you accountable, because we are both the shareholder and the director. I see that you have a beautiful wife.
Thank you.
Is that your wife?
Yes, that's my wife.
Okay. I will suggest you and her work out a plan to being able to hold you accountable. But it's a habit issue, my brother. You see, what people do not understand, how you handle the money, it's a habit issue. If you have a tendency of not keeping track of where you are spending the money, you will also not know where the money went. When you are not recording, you will also not know what did I do with the money. You have to also understand, because you lose the slips and the records of information, you will also not have proper income tax records, which means you are more likely to be paying more on taxes. So my advice to you, improve accountability. First, be accountable to yourself, that you're gonna from today buy a journal or a diary where you're gonna, before you spend the money, you write it down. If you're paying somebody for whatever, you say, put the date, amount that you have spent, who did you pay, and paying for what. When you start tracking the money, you will then start seeing where the money is going. You will then get your wife to assist you to summarize those transactions. Or you can get a daughter or someone at home. I'm sure you know a matric student that doesn't work, that is sitting at home. They can create a small exercise book where they are summarizing all this information for you so that you know where the money is going. I also think the reason why also you'll spend the money and not know where it goes, you don't plan for it. So you're gonna start planning a week before. Plan, have a budget that you are setting up. This is how much I need to run for this week to fulfill these following orders. And this is how much I'm gonna use. And when you use the money, you track, you consistently are tracking. Please take the previous advice that I gave earlier also of you determining your own salary. I hope that is gonna help.
Yes.
Thank you so much.
But okay, just before you go, just a follow-up question. Like let's say you'd find out the business that I'm doing, maybe it's not even that much money. It goes about, maybe let's say the highest money that I've made is like 4,000 to 8,000 rand. So now, how do I pay my salary with that amount of money?
So, my brother, it's not the size of money that actually makes sense or count. It's about how much out of that 100 or 800 rand or 8,000 rand or whatever amount it is, are you supposed to keep for yourself? It can be cumulative or it could be on monthly basis, depending on the nature of your business and the business model. But what I am trying to say to you, if your business is making an amount that is too little, then you shouldn't be paying yourself in each transaction. You should rather pay yourself at the end of the month.
Okay.
And how you can work out how much the business should be paying you, you will follow the same response that I've made earlier, where I said, you need to work out what is your family budget, the amount that is expected from you to contribute. And from that, work out, can the business be able to deliver on that? If the business cannot deliver on that, then you need to be doing something else.
Okay.
All right. Thank you so much. Guys, can we try to ask the question relating to this? It seems like the questions we're asking are more compliance-based or more focusing on financial discipline. I will try to have another webinar where we're talking about financial discipline. Denise, please assist. There's a hand, about 3 hands. Please assist me with the hands.
Okay, before the hands, Amanda has asked a question, which is cash flow related. She's like, how do we manage cash flow as a startup when suppliers give goods, cash on delivery, but customers pay after 30 days? Example, large corporations.
Okay, I will cover that. I think it's example, strategy number 9, 19, and 20. I will cover that shortly.
Okay, Tegofatso's hand is up.
Okay, please go ahead.
Hi, good afternoon. Mine is related also to cash flow. As a startup, we have, for example, an intern whom we are paying, and I understand the paying of the salaries and what and all of that. But with clients, sometimes, delaying. I heard your advice on all of that, but as startups, we have this. You're going to be a little more patient because, you don't want to annoy the client so that they don't come back next time or they cancel their service. But then how do we manage that relationship and still make sure that, for example, the follow-ups every 7 days of unpaid invoices are done without deterring our clients, and we're still trying to build a reputation, or rather a track record.
So it's actually being professional and not feel. I think most of the time, entrepreneurs, we feel as though being professional or being firm is gonna maybe make the client to feel indifferent to us. I have found that when I am firm based on my terms and conditions, they don't mind the reminders. But when I have not outlined upfront, then it's a problem. So even when you go through your terms and conditions, highlight, we will deliver this by this time. After 7 days, we'll expect the payment if it's a 7 days invoice, or after 30 days. If the invoice is not sent, we will send reminders to you until such time. Should you need us to support and provide additional information, please alert us. So by discussing it with clients first upfront, I think I used to have a client who will actually say, no, don't send the reminders every 7 days, send a reminder every 15 days. Why? Because our terms and conditions was 30 days. But if it was an invoice which needs to be paid within 7 days, I will definitely set up my system to run the reminders every 7 days.
Okay, just to follow up, are you going to talk about the different systems that we can use, like specifically
So for today, my
applications
dear, we're not going to cover different systems. For today,
Okay.
I'm just giving you the things that you need to have in place to make sure you're getting a cash inflow in your business, the foundation. We will have another session when we are looking at different systems that can do these 5 things that I've just suggested here. Is that okay?
Beautiful. Thank you so much.
Sure. It's a lot of content to go through. So I just wanted first for you guys, one, have a framework of what you need. One, we've spoken about you're going to have terms and conditions, and I've outlined on how you're going to get your terms and conditions, but also how you're going to do it cheaper than going through the lawyers. And then number 2, setting up the financial system. We will have another webinar dealing with the financial systems that are cheap, that are available, that are easy to actually work and set up these things. So the next thing that you need to do as your number 3 on your strategies is to actually segment your customers. Segmenting your customers basically is based on their buying pattern and the size of orders or the size of purchases they do for you to be able to manage the credit risk and also the customer retention. So this is very important. You can have like category A, for example, whom you may call silver or diamond, have B, platinum, have C, new customer with no buying history. Maybe those you can call them, you can say bronze. So these different categories allow you to assist you to know on how long you should be responding to the needs of those customers. So in my business, I have platinum, which is my contract that I have with corporate, and then I will have C, which will be clients that I work with all the time, and then I will have maybe a C of clients that they will just send me a questionnaire and then I will just answer that, where there's no underlying arrangement in there. So by categorizing this also allows you to be able to know where do you get most of your money, but also you can then set up service level agreements that suit that category of the customers. Number 4 on the ideas that you can actually implement for improving your cash inflow is set up prices that are competitive. Most entrepreneurs, we have found that they set up the pricing too low because they think they can compete on just price. Understand, you will not be able to compete on the price if you're a new entry into the market. Always compete on the value. Charge different prices for different customer segment. Be transparent on how you have worked out your price. Try by all means also to just itemize your charges. Make sure also that you focus on where you are in terms of your product life cycle. There are products that may not be matured enough, which maybe might mean you may not charge the high end. So you will use maybe a cost and plus approach, but really make sure that your pricing strategy is also aligned to your customer retention strategies. I have also included another link in this presentation where there is more than 16 customer retention strategies that you can put in place. But whatever customer retention strategies you put in place, it must be aligned to your pricing strategy. So I love what Richard said here. Say never take your eyes off the cash flow because it's the lifeblood of business. I think if there's nothing that says anything there, yeah, that's it. I think he was really right. Most business die, not because they don't have a viable business or the business is not profitable, but because they just do not make sure that they have cash flow. So this is number 5 on the list on what do you need to do to improve your cash inflow into the business, money coming in. So I generally advise clients avoid to sell on credit. But if you have to sell on credit, create some sort of a credit check of the company you're dealing with, its directors and also shareholders. Make sure that the directors and shareholders of that company are also providing security of some sort should actually there is liability of you providing the services or product. Try to make sure that you do not sell your product and services on people you don't know on credit. Not everyone is honest. Please don't be naive. Remember, credit is equal to trust. So a person must be trustworthy first before you can give them the credit. If someone is new, you have not worked with them, really consider looking at asking for a deposit that can range from 10% to 50%, depending on the nature of the transaction you're doing and the risk that is associated with that specific product. When you are also setting up and doing this credit check, set up a credit limit based on the credit risk that you have assessed on that business. Number 6, how you can get the cash inflow into your business. Design a collection system, controls in your collection. Set the policies and procedures on what to do, who to do it, when to do it, and how. Previously, we used to have these stamps where you will stamp the statement, agent, legal. Now everything is online. You can do a watermark on it just to make sure the client is clear that the account is overdue. Make sure that such system and the communication is tracked. And it's an appropriate communication that the client has chosen. If the client has chosen emails, you will send that communication through email. If it's WhatsApp, use WhatsApp. If it's SMS, use SMS. But make sure you always have the proof. Avoid using calls, not unless the calls are done on the CRM system, a customer relationship management software. And step number 3 within this designing of collection system is to monitor these controls every month, ensure they are being adhered to, and make sure also you review them just for professional, just to make sure that they're being executed professionally. Also design templates for emails to follow up from letter 1 up to letter 7. So when the account is overdue, you will have a template for that. When the account is now on final demand, is being handed off, you have a template for that. So set up those templates and make sure that you already have those. If you need additional guidance on this template, let us know. In our Finance Success program, we do have samples of these templates on what you should be saying. The next thing that you also need to do under the collection system, you need to develop a script. This is relating to the texting, plus also the script relating to the calls, so that you make sure that the communication is consistent. And the last one, have a dedicated resources that does the collection and make sure that resource work closely with the debt collector. Just remember, you don't need to pay the debt collector. You can make the arrangement with the debt collector to actually pay them when they collect. But they generally will agree to that arrangement if they understand your terms and conditions, if they know your processes, and also they are involved in these processes that I've just outlined. I will stop now Denise, I see that there's about 10 people on that have posted their chart. Will you please read the chart for me?
Yes, I will. Before we go to that, Muketsi's hand was up from earlier, so I said we'd acknowledge him first.
Please go ahead, my brother.
Hello, guys. Hi. Hi, how are you guys?
Good, thank you.
Good. Thanks for the session. It's very informative. My question was in relation to the cash flow that you mentioned, that we should have systems in place. And for a company that has already have system in place, and then where we also have a system that allow us to track our cash flow. Now, how do we make sure that we maintain that through and through, in line with the current situation where COVID is taking over? Some of us, our businesses had to stop for a while, and then we ended up putting our hands in a wrong cookie jar.
Okay, so
not because we want to, because the situation dictates that we put our hands in the cookie jar.
Fair enough. That I think your question takes us straight to number 7, a credit insurance. You see, when you have put the first 6 steps, your next step is to make sure that you actually you have a cover for in case your customers are unable to pay you. And there is lots of companies that have this insurance. It basically covers in case your customers do not pay you. You can get a broker to assist you with this. Make sure when you get a broker that deals with businesses, not a broker that deals with personal. But in addition, make sure that you share your terms and conditions before you do the claiming, and also share your collection policies and procedures so that they are very clear on your processes. You don't want, when you put through your claim, they then reject it because they are saying you didn't follow certain processes and systems. So I know at this point, some of you are saying, Precious, I wish I knew this before, but I am giving you this now so that you can set the foundation. For the clients that already right now are sitting as a bad debt, the best you can do is to actually go and assess how big of a problem is the issue in terms of collection. Find out if you do not have a legal right to actually attach assets of those directors and shareholders if the debt is too big. Guys, that process it's a messy one. I have done it though before through a debt collector where the sheriff went to attach the asset and the client ended up paying very fast, sending even the proof of payment. So consider looking into it if you can't hand over the customers that to the debt collectors. But keep in mind, because of COVID, there will definitely be businesses that are closing down. So my suggestion is that really speak direct to that individual customers, understand what are they doing to actually get the money, and then build a relationship. Just remember that at this point, things are a little bit dicey. So several business models need to be revised and changed, which means you also need to consider next time how you screen your clients and what are the risks associated with that. Denise, may we proceed?
Great stuff. We have some comments on the chat. So Monde says, charge by value. This is good stuff. Break down the product cost first, then add markup. Selling on credit hit my business very hard, and sad enough, the same customers left to go pay cash elsewhere.
Yeah.
Tsegofatsa says, no more, it's okay, you can pay me later.
Yes, I think we are too hungry as entrepreneurs. We accept terms that are not acceptable. We buy things for cash, but we expect our customers to be paying us later. You should be charging the client that's going to pay you later more, because you should have a cash price. So for the person, like, that is why I was saying you should charge different prices based on different terms. That's what I mean. You see, a person who's paying me now should pay lesser than the person who's going to pay me 30 man in 30 days or in 60 days.
Yeah.
Is there any other question, Dennis, or should I proceed?
It's more comments. Some of our people from YouTube are also posting comments. Adelaide is on YouTube.
Oh,
Then-
Sis Adeline, hello. Oh, I miss her. That is one of the lecturers that I used to work with at UJ. Oh, Lord, I miss them. Oh, COVID. Okay, let's continue. One day I shall make time to see her. Okay, so another thing that you can do to improve, guys, as I said, today we're focusing on sweating the asset, sweating the current asset, which is called debtors, your accounts receivables. So the next thing that you should be doing, you should consider ceding of your debtors. What does that mean? Cession of the debtors is where you are basically transferring the personal right you have to another person. It is a legal act of transfer. It's transferring of the claim or of this asset to make sure that you secure the debt. The really effect of it, it allows you to be able to claim the money earlier than the time when that customer will be paying. Just make sure that your terms and condition also allows you to do that. And this is very important, entrepreneurs, because it allows you to be able to cede the debtors even when the probability of them not paying is not there, just for you to be able to get a cash early. Sis Violet, your hand is up. I just saw. Denise, is any other person whose hand is up before Sis Violet?
No, Violet has posted questions in the group. I actually said I would acknowledge her next. So if she wants to come through, it's your turn.
Okay, Sis V, go ahead.
Thank you very much. This is a very informative session. And it came at the right time when my team and I were working on. So now, after how long do you send, let's say a person, the 7-day payment period, 15-day, whatever. So after how long post the payment agreement with us, do you start sending out, do you hand them over? I think it's more the handing over, because then every month you can send the reminder to pay. But
Yes.
after how long is a good enough period without saying, you're being unfair to the customer?
So,
is there such a thing, or different people do different things, but maybe having
no, there
being
is
in
some sort
practice
of
for
a
this one?
generic guide, Sis Violet, on that. The follow-ups that you will do every 30 days. So you will send, if the terms and conditions was 15 days, you'll pay after 15 days, or you'll pay in 7 days. You can do a follow-up 3 times on the 7 days. If it was a 30 days, you will do it 3 times, which is what? 60, 90. And then you will hand them over on the other side when it's now above the 9. So the general rule is 3 times the reminder. Now,
So would that
but
3 times
in
be the 90
between the
days?
reminders, these are written reminders where you have a proof of delivery. In between the reminders, you are allowed to make other alternative communications, either by phone or physically calling in or SMSing the client. But what you need to provide to the debt collector is a series of communication and the responses of the client, so that the debt collector can assess what is the real reason the client is not paying. Is it because they don't have the money, or is it because they just being difficult? And you do find, like what I was making an example, the client that I was referring to, that I handed him over and the sheriff had to come, he didn't think I was gonna do it. Sometimes customers do test you. So you really need to make sure that you are consistent and you also apply it. So just in closing, making 3 follow-ups. So the first one letter will say, your account is now overdue. The next one, your account has been overdue for more than 60 days. We are now going to be handing over this account if it's not paid within the next 30 days. Then that 30 days hit, you then send a final letter. Your account has been handed over to our debt collectors. And then maybe get with you, Sis V, we just need to work it out, which are those clients, because you are my client, and then we can work out, and I can then give you those templates that your team will send. And you can put, because I implemented an accounting system with you, Sis V, we can actually even make the letters to be part of the statement that gets sent to the client.
Thank you
To
so
be
much.
happening
Sis P.
automatically.
Thank you very much. Sis.
So guys, Violet actually runs Tumile. She runs a multi-million business in logistic for both passengers and cargo. I think last year she started being very aggressive on cargo. You're doing Chrome, right, Sis V?
Yes, I'm doing chrome and manganese and also
And manganese.
pelleted goods. Yes.
Yes. So so we implemented systems for her to make sure that she has hands on top of your hands, but she also can be able to review and see the reports and make an informed decision. I think it was such a resistance. I had said to Sis V, we need to have an interview, me and her, on what was happening before I came in and what is happening now. And I think soon we should have that, so that maybe we can have a case study where other entrepreneurs can also learn. What did you learn? What are the things that were a struggle, which were resistance, and which things now are more clearer than they have been?
I would be happy to do that interview, Sis P. Thank you so much. I'm actually closing my eyes in embarrassment when you speak of resistance.
I think now we are more embarrassed about what happened than actually saying, okay, this is what I didn't know. This is what But don't worry, remember, why we are here as entrepreneurs is so that we don't repeat each other's mistakes. So no one should go through what Sis Violet went through. We should learn from each other. When we learn from each other, we start progressing. We start actually going forward. But if we keep on repeating that, we are walking on the same steps. So yeah. Okay. Denise, let me move so that we are within the time. So the next one is factoring. So the factoring is very easy system. You basically, the factoring company takes a fee and then they give you the cash now. They chase the debt on your behalf and they take a specific amount and that will be agreed upfront. So it's a very easy system. In South Africa, the range is between 15 to 25 of how much they will retain and so on. So at the end of the day, the customer will pay and then they will release the money to you. But also the customer does not pay you direct anymore. They pay the factor. So yeah. The next one. So I've just put a more detailed explanation on how the factor will work so that you are very clear. I will not go through this detail, but the principle that I've outlined on the previous slides basically talk to this. Please, guys, read this. I will add the link below for for your presentation. Okay, the next one is number 10, invoice discounting. Invoice discounting is slightly different to factoring because it's just about management of the books and liaising with the clients and still dealing with the credit control and invoice payments. But they're all fit in making sure that you have the cash injection that you need. Just understand though that the difference between the factoring and also invoicing is that the factoring, what happens, they do the administration, the debt administration, and they basically take over the credit control, the collection part. Whereas in invoice discounting, you will still remain the person to actually do the collection, doing the back office. So that is the difference. Invoice discounting is very similar to you going to your client and say, you owe me 2,000 Rand. Right now, I really need cash. Pay me 1,800 and then you will get a discount on 200 Rand. So that is what we call invoice discounting. And you can have that also with other people to be able to do that. So on 11 is online payment collection. So this one, entrepreneurs, I think it's the magic of internet. Make payments easy as possible for your customers. Use a machine if you can afford it. There's even now phones where you can collect cash using a phone, using a QRC. Also, try to make sure that on your online payment system, there's different option. There's PayPal, there's Visas, there's MasterCards. Even though I don't like American Express, but include that also if it's possible. Also, just understand that some other payments can be run through institutions like PayPal, whom then does the processing of the things. So just make it easier for the customer to collect the money, for you to get the money quicker. Number 12 is offer your clients a fixed rate. And I know, especially to professional services, people struggle with this one. Rather create packages to charge the client a big bulk amount and then ask them to provide you with an upfront fee and then pay the balance that's smaller over time. Also consider also charging the retainer. Don't charge the retainer on the 30th. Charge your retainer on the 1st so that you get your money upfront in advance. And that actually does assist a lot with cash flow. I also always advise clients, stay away from charging an hourly rate. Really focus on deliverables, on the results also. There are instances where I say to clients that when they have selected a product where I feel they are not comfortable to pay me a fee, where I will say to them, if you get the right results, pay me, but they will generally have to pay me more. So I used to do that when I was doing tax accounting, where I would say to a client, let me review your taxes. If I see that there is a possibility of refund, you will pay me a percentage from that refund because I will have done an analysis first. And that also I used to earn more money than charging an hourly rate. So just try by all means, especially those who are in professional services, to actually stay away from charging hourly rate. Focus on the results. Focus on the value, focus on create the whole package of saying, these are the things I'm gonna deliver. There are instances where the client end up not actually want to continue with the project. But remember, if there is terms and conditions, you will still can pursue that to complete the project. There are instances where you have done maybe majority of the work, but the client maybe is not ready. Especially in coaching programs, you should have a way of being fine with it, but make sure you provide the support, because coaching really depends, is the client ready to implement? Because when the client is not ready, forcing your way to implement certain things is not going to embed controls and systems if you do that. I see there's a hand, Denise. Should I wait, or can we take the question now?
Yeah, Nokutule, you can go ahead.
Thank you very much. Hi, everyone. I have a question when it comes to credit. When you're standing on the other side of the credit, when it comes to cash flow, I mean, our customers are taking a while to pay, especially government. You're sending the letters, it's falling on deaf ears. Meanwhile, you need to pay salaries and all the other expenses like rent and whatever that comes with the business. So we've been fortunate to be able to take credit from our bank and other institutions, but it's so overwhelming, Ma'am Precious. It's very overwhelming. So I'd like to know how to manage that whole situation, because we're looking at expanding nationally. Yes, we're receiving support in terms of receiving credit to be able to do that. But how do we cope? Because it's very overwhelming, the delay in payments from customers and now having to reach out for credit. Which is something that makes me very scared and very skeptical, but it seems like it's a luxury if I'm able to even take out credit, where my colleagues who have other businesses are unable to.
Yeah, so not to let the best thing that you should actually try to do is to create a relationship with the person that does the processing of your invoice. And Noctula, I have worked in government. I'm also in governance structures in government. Make sure your contract with government do charge penalties and interest. You know, one thing that government is afraid of is something called fruitless and wasteful expenditure. And people get fired for that in government. So my suggestion is that next time when you're building up, make sure that the interest and penalty get charged for late payments. Also create a system in your business of elevating and reporting institutions. I think there is a toll-free number in government where they keep track of which department or entity that has not paid on time. And there's investigations that get done on those invoices. So the government is taking this very seriously. Now, you must be prepared to walk away with people hating you than you not having your money. Because I think sometimes when assistant tool, we are more worried about losing the customer and not realizing that actually that customer never respected you in the first place.
Yes, yes.
So, and you're gonna lose anyway if you don't follow up on this invoice. So follow it through up till the end. Now, I see that Vanessa, we lost her, but she just came in. She said, when you walk away from the lies and the deceit, when all effort have failed, lawyers and debt collectors. So, Sis Vanessa, the reason why we'll have the lies, deceit, effort failed from lawyers and debt collect, we never screened those clients. We have to screen clients. Clients have to earn the trust to honor their words. You can't just give someone credit without having established that trust. Remember what I said, credit is trust. So which means what we need to do, we need to screen our clients. We need to make sure whomever that we're doing work on credit, there is some sort of credit check backgrounds that we have built up, but also we also make that person personal liable. So one of the things that I've seen, and please do not take my view on this, rather hear where I get these views and then see how you're gonna work around it. In most contracts that I have seen of terms and conditions by entrepreneurs, they never make the person who makes a decision to be personal liable. So when the business liquidate, what I have found, then you also lose if you have not extended your terms and conditions. That if then because sometimes you find that the client has used your service, and he then but in his personal life he's still fine, and when you are not fine. So you're supposed to make sure that your terms and conditions do not just stop at the business, but also hold the directors personal liable and the shareholders to be able to pay you. And that is why relating it to attaching the assets of those people also will then link in. Okay, Dennis, can we take other comments or questions?
That was Vanessa's was the last question and comment in the group, in the chat.
There's no others. I see there was.
Oh, Monde was saying progress, progress. I'm looking forward to this year ending better than it started.
Great. And then I see that he said, people must now send proof of payment. Indeed, my brother, their goods will be delivered. The COD, if they're having a big order, ask for what? Your deposit. Make sure your deposit cover your cost of sales so that whatever they may not pay you, it's more profit than you having to pay your suppliers. So this one, guys, I think this, out of all these 26 ideas on how to actually increase your cash flow, is understanding your industry trends and seasons so that you keep in mind exactly how much working capital do you need and when do you need it. Number 2 is being prepared and plan for the time when you have high activity season to ensure that you are ready. You are ready with your promotion, you are ready with advertising, you're also ready with the marketing expenses. The third one is to make sure that you are clear on how much money do you need on stock and how much of that stock, plus also your top 5 operational expenses. Make sure that you run specials and bulk and complementary product offering to actually just give you some sort of injections of these trends just before they kick in. So things like when you're in retail, right before summer, there will be a winter sale. So consider having something like that to get you ready for another season or a trend that is coming through. So number 14, it talks to what Noktula and I were talking about. Charge interest and admin fee for late payments. Make sure that this is done for all the accounts that are not paid on time. Make sure also it's part of your terms and conditions. Please do not listen to the stories. When someone gives you the story, drop me an email. And also make sure that, yeah, I hear what you have given me as the reasons why you have not paid, but we are responsible. We need to be responsible as a business. We will have to comply with our policies and procedures. Avoid using the word I. Always say we. You see, most of you are one-man show, but when you go to the market, you also act as the one-man show. And that puts you at a disadvantage. I've had instances where I was negotiating with a client and I would walk away and say, you know what, I'm going to go and speak to my partners. There were no partners that I needed to speak to, but it was just giving me a breather to be able to think through a specific decision, then giving me time to come back to them. I've never had a partner, especially on GAD, but in others, I've had partners. But here, I've never had partners. But in most instances, I always say we, I never use I. Because when you use I, it's an indication that you are the decision maker. I don't want to give them the sense that I'm a decision maker. I want them to know that I am in control, but I also being held accountable somewhere else. And I used to also have a board of advisory that I will touch base when there's certain things that I'm unable to respond on quickly. Have those around you also as an entrepreneur. Guys, you will not be able to build your business on your own. Get a board of advisors. Get people that you contact on different aspects of your business. Number 15, apply for credit with key suppliers. The steps you will need to develop on this: 1, identify the top 5 expenses that should represent at least 60% of your total expenses. Also, identify at least 3 suppliers on each of these items of your top 5 expenses. Get the best price, negotiate. Apply for credit. Ask them, do they have a credit? And also follow up to make sure that you're getting the longest term possible with those clients. And just keep in mind also their turnaround time so that you are clear as to how much volume they can give you, but also the credit limit they're giving you, but also the volume that you can be able to meet based on the credit limit. You might need to take maybe 2 of them at the same time if your volumes are high. I see that, Denise, I think there was a hand. Please let me know, stop me if there's a hand that I've missed. Number 16, this is the one that I think someone asked about, accounts receivable. When you actually already have these customers, what do? You have set up the system, but they are still not paying. So first of all, you have to analyze the age analysis against your credit. Assess the notes from your team on what is it saying in terms of why they are not paying on time. Make sure that the credit control activity is appropriate. Get your debt collector to assist. If the debt collector cannot assist, the problem could be your credit allocation from the onset was not, your credit risk assessment was not right. The next point that you also need to look at is to consistently be looking at accounts receivable turnover at all times. Assess the number of times the customer is coming to you and the volume that they are buying versus the credit limit you have set. Look at the trends. Look at what effort are you putting in to actually get this money and chasing them. Make sure you focus on the quality and make sure you act sooner than later. When someone says, I'm gonna pay you next month, and you should follow exactly which date next month, which then tells the credit controller when you need to phone that person. And also just make sure it's someone who has been trained properly in debt collecting of this. The last one, design plans with clients where the clients will actually be progressive. So you say to a client that is new, you know what, we have not worked together before. Because we haven't worked together before, may I request for your first order, please give me at least this amount, this percentage. You can even go up to 50%, as long as that cover your cost. So, and then say, okay, if you are able to do that, then I provide, and then next month you order again, maybe that we can reduce it to be what, 20%. In the third month, maybe we can then reduce it to a different percentage. But just don't give away your goods or your products or your services for free. Number 17, develop a customer retention strategy. Give discounts on returning customer, reward customers for being loyal, upsell to the current customers, ask current customers to share with their network their testimonials. Also, I have included about 16 strategies for you to build a customer-centric loyal program that is going to help you to increase more thank you, more customer satisfaction, but also a better responses, because when you get a strong customer retention with clients, it means you have built up a rapport with them. It means that there is a well-established, they will always know when they have a problem in that area, they will only just think of you. So just build that up. And I think as entrepreneurs, sometimes we're so focused on just getting a customer, and next customer, and next customer, instead of even taking time to interview the current clients and say, which areas do you need more support? How can I help? What are your current challenges right now? And that is going to actually help, whether you're providing product or you're providing services. Number 18, identify high profitable product or services that actually provide, that needs lesser effort and time, that are scalable, but they are high in margins, meaning they have a high gross profit. Automate that process. Automate from customer acquisition all the way up to the delivery of the product. And here are the steps that you're actually gonna need to take to execute this. One, identify exactly where to find that customer that is looking for this solution. Place an ad using a lead generation. Demonstrate your product or service. Have a case study, have testimonial. Sell, and consistently be selling. Do not just sell in your own store, but also sell in different marketplaces and also to different people. Deliver. Make sure you use company like You Africa to assist you in fulfilling the orders of physical product. Design templates, refine your processes, get customer feedback on what's working and what's not working. Don't be afraid to try new things. 19, move on your value chain. Review your business model. Some of you have decided to be retailers, but the retailing space in your industry may not be working that well. Maybe you need to move a little bit down to be on the distribution. Maybe not from a distribution to maybe consider being a broker or something. So just keep in mind that when things are not going okay in your business, It's a feedback to by the market saying you are not positioning yourself right. You are not placing the product in the right value chain. Maybe you actually could have too much stocks you need to review and increase the volume for you to increase more sales. I have a few examples that I want to share with you of where I advise clients to do this. This client is not even a client, it's someone I met on Twitter. She was selling the trees, the logs. I'm sure you can see these logs. And this is a truckload, and she's selling them at 600 Rand. And I'm like, no, this is the wrong costing and pricing. She then responds to me and say, Precious, the market is very strong here. There's quite a lot of people that are selling the same thing in that environment. I then say to her, okay, relook at your distribution channel. Consider moving backwards on your value channel. Sell to bulk clients who are far from your area and keep thinking about it. You'll find a better solution. I think after 22 hours, actually, I'm sure you can see on my Twitter here, she then responded that she took my advice and has reached up a number of establishments, and the responses was quite great. And then she was able to sell more. So this is just one example. I think I have another example that I've put here. This is one of our clients on NEF whom was actually applying for about a 4 million contract. She's in tourism, and we all know tourism is struggling right now. And she did her work, but the pre-COVID and then post-COVID was saying, hang on, even if COVID is no longer in place, your business is no longer, the model is no longer working. She just moved certain things and started adding up beauty spa and added up complementary product within her place. Guess what? She got approved for 4 million. Why? By just changing the business model, moving within the value chain, finding complementary product where you're gonna still start seeing some economic activity. So guys, don't take the feedback of the market as negative. Always take it, what can I learn from that? What does that mean? What do I need to change? How can I innovate on my business model? I have on the next 6, I've got an additional 6 more on your bonus for those that stay till now. Thank you so much. We had such a high retention today. People staying longer, that is wonderful. I have 6 more for you. The last one on this one that I had promised you was partner with other people. Focus on your strength. Work out what you are really good at in your business. Work on that. Find partners that will do the things that you are not so good at. And then make sure also that that is just ring fencing. Make sure the people, I've spoken about this before, guys, choose people that have the right values. Do not select people from what they say, select on how they live their lives. The values are so important. Within partnering with people, also consider having complementary. Vanessa does social media and public relations. Vanessa can actually partner with an accountant or a lawyer or an HR practitioner because they're all targeting the same market. And I've provided some examples in there. You can, in other instances, even work with a competition. I have worked with people that I'm competing with. Again, that is fine because clients have a way of selecting who they like the best. And sometimes they may like me, sometimes they may not like me, and that's okay. So just consider working with people, and you can offer vouchers, workshops. Guys, I've done a lot of partnerships on that with a lot of people that run events, give away books and so on. And that has expanded my network, but also has allowed me to reach more people. So working with others that complement your products and services, but also focusing on what is your strength, what are you good at, and then find people that are good in other things to then partner with. Now, the bonuses. Can I take the questions before I move to bonuses? Denise, are there any questions on the chat or on the live session?
Okay. So there's some comments. Monda says, increasing of volume, my next step, really.
Great. And then next one.
We've got Terry with us. Feedback, especially negative, is platinum to small business. It is a guide to improving on one's business.
Thank you. Thanks, Terry. It's good to have you back, girl. We missed you.
Then Yvonne says, thank you so much, Sis Precious. You always just know how. I always get something out of your sessions. Thanks for the information, the extra mile and examples.
Thank you. Thank you.
And Vanessa says, partnering is so key and collaboration. Learning not to work alone and leverage skills.
Yes. Vanessa actually is the lady that I was talking about earlier, guys. She is so great on in public relations. She has done quite a lot of videos. She's passionate about helping entrepreneurs reach their markets. Please hook her up on Twitter. I think she's on Twitter and also on LinkedIn, including Facebook. Lebo, thank you guys for the feedback on YouTube. Okay, guys, don't go yet. I have 6 more bonuses, not even 5, it's actually 6. So I was doing the slides, rushing through, but there is 6 more that you can do to improve your cash flow. Number 1, get a credit card or something called a rolling loan or an overdraft. These are 3 separate products. Sit with your banker, ask them based on on your business profile and your personal profile, what is possible. Please make sure that you apply when you don't need it. Don't wait for it until you need it. You rather pay an admin fee to keep it than not having it. So the next one is a purchase order finance. Guys, this is wonderful. I told you guys I'm a non-executive director in the People's Funds, and they actually do this. They give you guys, you get an order from the government, and you take that order, you have a contract, you give it to People's Fund and say, please give me the money for me to service this client, and they give you the money. What you need to make sure you pay attention is that that contract, you should be able to get at least 20% gross profit, must have signed the terms and conditions, and provide your bank statement so that they can see that your business actually is working. They do have other information that they will need, but this will help you to get the order, to fulfill the order, and they are there, guys. Check them out. They are called the People's Funds. So the next one is number 23. Get a stock purchase finance. By the way, guys, these numbers, number 23, you can actually take that word and just Google straight up. You'll find hundreds of companies that provide that funding for you to have some cash. This one is when you're buying the stock, whether for the warehouse or to fulfill the order. It is very much similar to something which we call asset backed up facility. But what you basically are doing, you will get to be able to get the stock of which the financier is the one who will pay the supplier. And they might actually even ask you during the facility to actually provide some management accounts, but that's okay, guys. You know, when the financier is asking for a report, that's a good thing. It means they're monitoring things. So yeah, I love this one, especially when you're running a project where you need quite a lot of stock, or you want to push certain promotions and you don't have sufficient stock. Number 25, fire the customer that give you problems. So I think this is the one that gets entrepreneurs feeling no pressures. Do you know how hard it is to get customers? Yes, it's hard, but it's more harder when the customer does not pay you. A customer that gives you problems is the same customer that's not going to pay on time. So fire them. When they're not paying you on time, they always give you reasons and excuses. They don't value, they don't appreciate you. Only work with people that value and appreciate you. Focus on the customer that give you pleasure to work with. You will serve them better. Set time to deal with customers direct, but also set limit. Do not be freely available to customers because they tend to take advantage of that. And they will SMS you at 2 o'clock, in the morning. So just have a way of managing relationships and still remain professional and friendly, but also make sure that you focus on building processes with a client that also suit the individual preference. Me and Sis Violet, we used to have sessions at 5, 4 o'clock in the morning, trying to fit her schedule for her coaching. So again, it has to be based on the needs, but also at the client preference on what works, if you really want to serve and help the client. I think I have the last one. This one, I'm really here to release you. Don't be too lenient with your customers. Be direct and firm without being pushed over. Be clever and polite and really be consistent. Remove the emotions and attachment. Remove thinking all the sacrifice that you have gone through to get this order done. Sometimes other orders that are not even worth even one tear, one sweat. They were just there to teach us, to learn from one another. Remember, every human being that you're gonna meet in your life is there to teach you something. Consistently be asking yourself, if you feel things have not worked out the way you have planned, ask yourself, what did I learn? What can I do differently next time? Guys, these are the examples that I have found that will work in making sure that you improve your cash inflow. And I hope this also gives you some actions, which next to my next slide, which is your turn now. Which strategy is yours that you're gonna work on? What do you need to do? Who can you help and when? Please leave us comments on our YouTube account. I will also share the link and the slide. Please keep on sharing with us what has worked, what didn't work. Give us the feedback so that we can help you to implement these 26 strategies. Thank you so much for your time. I'm available on LinkedIn, Twitter, and also email. That is my office manager's email. So please send us if you need us to review your things and also just give you further guidance on what we have discussed today. We actually do not mind to provide that support. Thank you so much. I see there are questions.
Yeah. We do have some. So my label on the chat says, thank you, Sis Precious, for the session. She wants to know also, when is the right time to involve investors?
Great question. It's always the right time to involve the investors when your business is profitable. Get your business to be profitable, then involve the investors. Most of you as entrepreneurs, our businesses are not even profitable because we're not selling sufficient volume and the operational expenses are too high. Get your business to be profitable. There are businesses by their nature, they will not be profitable in the first 5 years. There's nothing wrong with that. As long as we are clear of that business model does not have profitability on the first 5 years. The investors are gonna know anyway that you are not profitable in the first 5 years. So be very clear and know when to involve them. It's gonna be informed by your business model, but also the nature of the business, but try by all means to get to be profitable. Keep in mind, if you are not profitable, it means whoever you're gonna get as an investor, they will be mainly be focusing on what? In equity. They will not be buying, so which means you're gonna need to let go of the equity that you own. Most of you as entrepreneurs, you are looking for funding, you're looking for a debt financing on the investors, but your business is not yet stable, is not scalable. So yeah, I hope this helps. I see a lot of feedback, great feedback, guys. Thank you so much for the feedback. Monde, what do you mean? It makes sense. My mistake was being an investor. She took over. And no idea on family. Oh my, I'm so sorry, my brother. I'm so sorry. So what you need to be careful of, if you're bringing an investor, you must be clear, there must be a shoulders agreement. You must also make sure that they don't have majority shareholding, so that you can then override them on their decisions. Also, make sure, guys, when you get to relationship, you are clear that you get into a relationship with someone who's stronger on certain things and which you are weak in, not the other way around. So when I go to business with people, the finance, governance, risk management is my thing. So if I am therefore looking for partner, I will look for partner in other areas which I will need support in. I think sometimes as entrepreneurs, we get into relationships without having first know who we are and what are our biggest strengths and how that contributes into the business. So Malebo, please keep in mind, it's not just about profit, it's about the business model. As I said, there are business models that for 5 years, like fintech, most fintech products or service or businesses, you will not have a profitability. And that's okay. Why? Because when it scales, it makes serious money. So it's a business model, profitability. What you must have worked out your numbers on. I will get to be profitable when I hit these numbers. But also keep in mind, an investor can be either equity or could be a debt. Sis Violet says, please do a session on governance soon. Sis V, you need to do a strategy first before you can do governance. Guys, have a look. Denise, please share a link of strategy, the website for people to do a strategy. And then we'll see who's ready for governance. You see, once you've done a strategy, you can then go to governance because the governance holds you accountable for what you have promised you're going to do in terms of your strategy. Okay, guys, there seems to be no other questions and we are 1 minute ahead of our time. Thank you so much, Malebo. Are there any other questions? What did you learn today? What are the things? What are your number one, your numbers, and what are you going to implement? Who's going to support you to implement that? And how can we assist you? Please leave us the comments below on YouTube for those who are on YouTube and those who are our regular clients. So you have my contact details. Denise, also you can share the link for them to join Finance Success, where we generally post most things in there. Then you guys can join. But those who are NEF clients, please, you don't need to join because we already post those regularly in there also. Sis V, let's do our strategy first, and then we'll do the governance. Is that okay? Okay, I think I lost Violet there. Guys, thank you so much. Denise, Bonolo, would you please look at the YouTube? Are there any questions that are loaded there that I need to answer?
Just checking.
Thank you. How is everyone feeling, guys? Do you think this is going to give you some cash in? Just give me some feedback on it. Guys, thank you so much. Okay, great. We will cover the systems. It seems like maybe we can do the system, but I would love to do the systems in case studies. So some of you are struggling a bit. So please share with me which systems you're trying out. And let me see, maybe I can compare the systems. Someone is saying, this Precious, please, a one-on-one, no problem. My email address is info as per that email. Please send your details. onto that email, Denise will find time for us to do it. Guys, go and do the work. It's going to increase to build up your cash flow, but it's going to set the right foundation to make sure you always have money. Guys, building a business is about systems, nothing else. So God bless you. Thank you so much, guys. And guys, go and subscribe on our channel also so that you can download these slides for yourself and also just to keep track, because you can also share this with your team and then work out a plan. Thank you so much, guys. Bye.
Bye. Thank you, Sis V.
Bye.
Precious, sorry.
Thank you.
Thank you, thank you. Hey, Denise, should I stop here? Bunolo, let's shut down.